Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be talking about a custom indicator known as the MACD through indicator. In other words, the moving average convergence divergence through indicator. Now, because this is a custom indicator, it means that you will need to download the indicator from a reputable source online and then add it to your chart. All right, and in order to ensure that you can be able to load the indicator on your chart, you would have to add the indicator to your indicators folder. That is, if you are using the MetaTrader terminal. If you're using the MetaTrader platform, after downloading the file, the indicator file, you will need to go to your indicators folder, all right, for the MQL5 or MQL4. If you're using the MetaTrader 4, you can click on File, Open Data Folder, then you click on MQL4, then you go to Indicators and you paste the file there. If you are using MetaTrader 5, then you go to MQL5, you go to Indicators and you paste the indicator there. So without wasting much time, let us go straight into what we have for this video. Now, because this is a custom indicator, if you want to add it to the chart, you have to go to Indicators, Custom, and then you go to the MACD through indicator, and this is how it looks like. So how do you make use of this indicator, and how do you identify buy and sell signals with this indicator? Now, similar to the traditional MACD indicator, the MACD through indicator shows you momentum of the trend, right? It shows you how strong the trend is, all right, with the aid of the histogram bars, and it also gives you buy and sell signals, all right? So when you load the indicator to your chart, you get buy signals when you have the blue line cross above the red line and both of them cross above the zero level. Okay, please take note. The blue line must cross above the red line and both of them must cross above the zero level. Okay, that is for a buy signal. Then for a sell signal, the blue line must cross below the red line and both of them must cross below the zero level. All right, that is for a sell. So now let us look for practical examples. All right, so here we are looking for a buy trade. First of all, we need to identify the direction of the trend, right? Because I will recommend using this indicator in a trending market. Okay, if you use this indicator in a ranging market, you might get more false signals, right, compared to when using it in a trending market. So we can see now in this example, the market is trending upwards, right? So what we need to do is to look for buying opportunities. So first of all, the crossover, the bullish crossover occurred here, as we can see, right? The bullish crossover actually occurred here. Then that's the crossover between the MACD lines. The bullish MACD line crossover occurred here, but the main crossover that gives us our buy signal occurred here. So in as much as if you had entered here, you would have still made profit, but do not be in a haste to enter after the crossover occurs below the zero level, because it is possible that the sell trend can still continue. If you look carefully, you will notice that this was a sell trend, right, before we now had a bullish reversal. So this crossover occurring in the sell zone could be a mere pullback, all right? It could be a mere pullback. So if you end up entering your buy expecting the bullish move to continue, you will end up getting stopped out if it was a mere pullback. So that is the reason why you must wait for the MACD lines to cross above the zero level. That adds a layer of confirmation that a bullish reversal is actually starting. It's not just a pullback, it is now a reversal. Okay, but if you were already in a bullish trend, that means your bullish crossovers would occur in the bullish territory. Above the zero level is your bullish territory, below the zero level is your bearish territory. So when you have a bullish crossover in the bullish territory, it indicates a bullish continuation. So for example, in this place we had a bullish crossover. So if you are looking to enter a buy trade, all right, if you are looking to enter a buy trade, because this is a buy trend, this is a bullish trend, right? So if you are looking to enter a buy trade, you can actually enter your buy trade after you get this bullish signal. Yes, because this is a buy trend, it's a bullish trend. So you want to look for bullish opportunities, right? Buy opportunities. Okay, so make sure that when you are looking for a buy signal, let it be a bullish trend. And then if the former trend was bearish and is a new trend that's about to start being bullish, make sure that the MACD lines cross above the zero level. Okay, but if you are already in a bullish trend and you're looking for buy opportunities, then of course your MACD lines will already be in the bullish territory. You should just look for bullish crossovers, all right, to enter your continuation trades. Then the reverse is the case for a sell. If you were in a bullish trend before and then you suddenly had a bearish reversal, make sure that you wait for the MACD lines to cross below the zero level. Can you see that the cross happened here? So probably you would have joined this sell somewhere around here. All right, make sure that you wait for it to cross below to be on the safer side. All right, to be on the safer side. When you enter, you can now set your stop loss above the swing high. Then for your take profit, just wait for the MACD lines to cross above the zero line again. Okay, then as for the case of a buy, when you enter a buy, you set your stop loss below the previous swing low, and you just, for your take profits or for your exit signal, just wait for the MACD lines to cross below the zero line again. Then now let us talk about the histogram bars. The histogram bars, they help to show when momentum is increasing. Okay, for example, in this scenario, we can see that the histogram bars were getting longer as the bullish move was getting stronger. Okay, now when the bullish move began to get weak, we can see that the histogram bars began to drop. So basically, the histogram bar shows how strong the trend is, or how strong that bullish move or bearish move is. As in the case of this sell, you can see that around this point where there was an increase in the strength of the sell move, we can see that the histogram bars got longer. Then as the sell move began to get weaker, you can see that the histogram bars was reducing in length. So basically, that is what the histogram bars help you to identify. Okay, the strength, the momentum, right? How strong that particular move is. All right, so basically that is how the MACD through indicator works. So when you are using this indicator, make sure that you observe proper risk management, not trade with an amount you can't afford to lose, and make sure that you use good risk to reward ratios. All right, if you are risking $1, your potential profit should be a minimum of $2. Okay, it is very important, all right, so that you do not end up losing a huge amount. Okay, if you have equal number of wins and losses, you are still going to be on the winning side if you are using a risk to reward ratio of minimum of 1:2. Okay, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and do not forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching, and I hope to see you in the next video.